Hello everyone, this is Professor Xun Bian. In this video tutorial, I'm going to show you how to calculate the internal rate of return, the IRR, using the TIBA2 plus financial calculator. So the question that we're going to work through in this video tutorial is that we want to calculate the IRR with the following cash flow. So specifically, at time 0, we're investing $10,000, and then we're getting $5,000 at time 1, another $5,000 at time 2, then $7,000 at time 3. So with the cash flow, we want to calculate what is the internal rate of return. This is something that you can do pretty conveniently using a financial calculator. We're going to use what we call the cash flow worksheet to perform the calculation. So what do we want to do first? As always, you want to clear the memory of your calculator, right? You want to do second, reset, and enter. You want to wipe out everything that's in the memory so you can start a new calculation. And then what you want to do is you want to access what we call the cash flow worksheet. You can press the CF button on your financial calculator to do that. And then once you're in the cash flow worksheet, you just one by one enter the cash flow. So the first thing that you have to enter here is your initial cash flow. By initial cash flow, I mean the cash flow happens at time 0. In this case, you're making an investment. You're contributing $10,000 to this investment. So you put in negative $10,000. So to do that, you can put $10,000 negative, you enter that, and then you go to your next cash flow by pressing the downward arrow key. And then what do? Is you enter your future cash flow. The first future cash flow that you have here is $5,000. You enter that, right? You press the downward arrow key. Once you enter the cash flow, for each cash flow, you also have to set the frequency. You can set the frequency to be 1, and then you can enter the other $5,000 and then set the frequency to be 1. But here, the more efficient way to do that, because those two $5,000 occurred consecutively and they're in the same amount, you can actually use one entry to capture both of them, right? Again, that's provided you have cash flows reoccurring, the same cash flow reoccurring consecutively n times. In this case, we have $5,000 reoccurring consecutively twice. So what I did here is that I enter $5,000, right? And then I set the frequency to be 2 to capture both of those two cash flows. And then what do? Is you go enter your next future cash flow. That will be $7,000. You enter that, you go down, you set the frequency, right? In this case, the frequency is 1, and then you're ready to calculate the IRR, right? What do? Is you hit the IRR button, telling the calculator that you want to calculate the IRR, and then you hit the CPT button, right? This is basically to tell the calculator to calculate. CPT stands for compute. And then if you do all of that, you should see on your screen, the answer should be 29.94. What that means is the IRR is 29.94%, right? So this is how you use the cash flow worksheet to calculate the IRR. So let me bring in my financial calculator. You can actually see how everything is at work, right? The first thing obviously you want to do is you want to clear the memory, although I probably have done that already, but still let me do second, reset, and enter, right? That's how you clear the memory. And then here you see the CF button. That's your entrance into the cash flow worksheet. So what you want to do is you want to press that, right? So this is the place, the CF0, that's your initial cash flow. In this case, you have 10,000, right? But notice here, it is very important that you enter this number as a negative number, right? This is cash outflow. And all the other ones that you have in the future, those are cash inflow. This is the investment that you're making, right? And those are you're receiving those cash flow in the future. So here, $10,000 negative. Notice here, there's the plus and minus sign, negative, and then enter. Okay, so this is how you enter the initial cash flow. And then here is the downward arrow key. Press the downward arrow key here. This is your first unique future cash flow. All right. Here, what I want to do is I want to do 5,000. Enter that and press the downward arrow key, right? F01, this is the frequency of the cash flow that you just entered. If you go back here, right, CO1, that's the cash flow itself, and F01, and that's the frequency that you want to set for the cash flow that you just entered here. So what we do here is that, as I said, because I have those two $5,000 occurring consecutively twice, what I want to do is I want to set the frequency to be 2 and enter that. And then I go down, right? I press the downward arrow key right here, and then you get to enter your next cash flow. In this case, 7,000, right? Enter that, and then press the downward arrow key. The default value for any cash flow, the frequency is always 1, so you don't actually have to change that, right? Although if you want to, you can enter 1 and enter, right? And then you just entered all the data, all the information that we need to calculate the IRR. So to actually carry out the calculation, here is the IRR button. What you want to do is you want to press that, right? Right now, the IRR is equal to 0. That's because we haven't done our calculation yet. You want to press the CPT button, and this is how you calculate the IRR. And one thing that I want to say here is that the IRR, you just calculated. Notice here the unit is actually percentage, right? So this is actually a percentage number, so it's 29.94%. All right. So because it is the IRR, it assumes that you know this is a percentage number, right? So what you do here is you're actually earning 29.94%, per year. That's basically what this number means. So this is basically how do you calculate the internal rate of return using the financial calculator. Hopefully everything is clear to everyone. As always, if you have any question, please feel free to let me know. I'll be more than happy to answer any questions that you have. As always, thanks for watching, and I will see you in another video tutorial.